Good morning, everyone. Welcome back to Morning Markets from the team at True Potential. Today we'll look at the market performance from yesterday and discuss some of the key trends that we saw there, in particular the move in sovereign bond markets. So just looking back, the first day of a new month yesterday, we continued with the positive backdrop to equity markets, with the Euro Stoxx 600 rising about 70 basis points or 0.7% yesterday. Within the UK, with the UK market up about 1.9% on the day, a number of the economically sensitive areas leading the UK market yesterday. And then that fed into what we saw in the US yesterday, with both of the major indices, the S&P 500 and the Nasdaq, up about 1.1, 1.3% over the course of the day. Again, delving into that a little bit more at a sector level, I think an interesting and subtle shift in dynamics yesterday, where we did see the economically sensitive areas of the market continuing to perform well. But alongside that yesterday, technology was one of the stronger performing sectors as well. And that's something ever so slightly different that we've been seeing over the past couple of weeks. Again, mid-cap, small and mid-cap yesterday was slightly weaker, but still positive, up some 80 basis points on the day. I think there was a number of factors that continue to support positive sentiment in asset markets yesterday. Both Pfizer and Moderna, they filed for usage of their vaccine, both in the US with the FDA and also with the European authorities. What we've heard this morning is that the UK has the first country to approve the use of the Pfizer BioNTech vaccine, so we will definitively be hearing rollout plans for that over the coming weeks. And that's a trend that we will see across the globe as we drop through the approvals process. Also in the US, we got some indications around how the support package and the fiscal support packages are being thought about there, having heard from President-elect Biden and also Janet Yellen, the Treasury-elect Secretary, talking about the need to really move this forward. So we had a proposal yesterday from a cross-party group of Democrats and Republicans setting out their plans for some $900 billion of additional fiscal support. This may be the impetus that's needed to start to move those discussions on over the coming weeks. We've touched on the need for this, given how some of the packages do expire at the end of the year. I just wanted to touch on the sovereign bond market yesterday, because we did see quite a move in sovereign yields yesterday. So if we look at the US 10-year, we did see an 8 basis point move out in the yield from 84 basis points to 92. And that was, there's similar moves across the curve in the US. So the 30-year moved out 10 basis points as well. And that, again, just indicates that steepening of the yield curve. Something that I thought we might have seen a little bit more of last month, just given the positive sentiment that we had there. But that move in sovereigns was evident across markets yesterday. The UK 10-year gilt moved out from 31 basis points to 36. German bunds moved from negative 57 to 52, so again coming in. So that's something in a trend that we'll continue to monitor to see how the sovereign markets behave over the coming number of weeks as we work through both the negative data points that we will undoubtedly get around COVID-19, but then the positive news that we continue to see with vaccine developments, vaccine approvals, and then the rollout of that with the distribution of that. The other area to discuss from yesterday was a continuation of the trend that we've seen over the past number of weeks, which was that of a weakening US dollar. So against a broad basket of currencies, we saw the dollar off about 70 basis points yesterday. Very noticeable against the euro, however, that the euro strengthened some 1.2% on the day and moving through that 120 level, a level that we haven't been through for a considerable period of time. We go back to earlier this year, we did hear from a number of ECB officials talking about their concern about the strength of the euro. It will be worth noting to see if there is any similar rhetoric at this point, just given the strength that we have seen over the past couple of days. Just on the data front yesterday then, looking at what we had in the US with the ISM, similar to the PMI discussions that we have for other regions, continue to be in expansion territory, so coming in at 57.5. It did decline from the level that we saw last month of 59.3, but still solidly in expansion territory. And I suppose it does serve to highlight a little bit the very swift moves that we can see in sentiment as we see COVID-19 infection rates spiking in certain areas and starting to roll over in areas. So it does feed into the data, it does feed into sentiment. Just finally then, Asian markets overnight, relatively mixed performance there. Futures for both the Europe and UK and US markets, I should say, on opening, suggesting a slightly weaker open today. But that's at this point in time, and we'll see how news flow develops over the course of the day. Please do join us again tomorrow, and many thanks for watching.
Having the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.